The sell-off in gold continues. And today, Friday, June 19th, a new major warning sign is developing for gold. We're going to look at the factors influencing the gold price. We're going to look at the gold chart, but most of all, I'm going to show you the new warning signal for gold for the coming days, maybe weeks. Let's get right into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Hi, my name is Daniel Helmy. Welcome to the show. I'm so thankful that you're taking the time out of your day to watch our show. So let's get right into it. If you watched yesterday's show about gold, then you know what happened today. It's not a surprise to you. If you missed that show, hit the subscribe button so that doesn't happen again, because you could have been ahead of the market if you had known what I pointed out yesterday, that this blue line right here, 4,215, that was the new line of demarcation. I said in yesterday's video, hey, we fall below this, the gold price is going to sell off. That's what we are seeing today in Asian and European trading. Now, doesn't look as terrible as this candle, for example, or as terrible as this candle right here after we fell below the huge line of demarcation of 4,500. But again, this is a smaller one. This was not as important as this one. So being down today over 1% in European trading in gold is substantial. So we know this line was important. And now things get really interesting, because now we have to assume, after we made a lower high, that the new lower low, remember, gold made a new lower low on the close here and intraday. Silver didn't do the intraday thing. Gold did. So we now have to assume that we indeed gonna see gold attacking $4,000, which would mean a new low. But we also need to watch very, very carefully if gold might form a bottom at these lows or near these lows. So we could see a double bottom. Now, there is a new major warning sign. If you watch this channel for a while, you know the factors that are most influential for the gold price. It's sentiment. Sentiment is negative, but not panicky yet. That's why I've always been saying that I believe we're going to get an undercut and a liquidity grab, meaning we're going to fall below the 200-day moving average. We're probably going to make a new low. Those two have happened. We're probably going to go below 4,000 to see panic selling. That would be panic selling. So that is when things are interesting. We have the technicals. We just talked about them. They don't look great for gold. Again, you can just remember one thing. We're below the 200-day moving average and we're making lower highs. There is no buying strength in gold. And the main reason for it is factor number 3, the dollar. Then we had oil, which is stabilizing, in combination with the Fed decision. Talked about it in the last gold video. Again, hit the subscribe button so you don't miss any of these videos. That information had been in your inbox, so to speak. If you subscribe to the channel, you got the notification, you watch the video. I got everything I need to know about the Fed decision. And then the bond market. Now, let's get to the major warning signal that indeed leads me to believe I think we're going lower in gold. And that is the dollar. Look at the dollar today, Asian European trading. We saw the monster move up, which I had pointed out for, I think, 2 weeks, 3 weeks. Doesn't really matter. If you've been with the channel, you've known, hey, things are improving with the dollar. Dollar's going up. If the dollar goes up, inverse relationship with gold. Dollar goes up, gold usually goes down. Now, today, look at this candle so far. If you're dollar bull, this is a nasty, nasty looking candle. If this holds, right at the upper end of the yellow resistance zone? That is not what you want to see when you are a gold bull. That candle, if it holds, increases the probability of a short-term pullback. So, in combination with an oversold RSI, which, by the way, interestingly enough, has a negative divergence. So, this point here at the RSI, at this candle, is lower than the peak that we saw the RSI here. So, the dollar went up, but the RSI has weakened. That is a warning signal that we need to pay attention to. This combination should lead to a stronger gold price. And what are we seeing in gold? The exact opposite. We're seeing weakness. And that's a big warning sign. There's nobody that wants to get in on the long side for gold right now at this moment. Nobody's playing this dollar trade right now, which means two things. Either the market thinks gold is going lower, so why would I take the long side? Or they believe, okay, we might get a short correction in the dollar, but then we're going higher in the dollar, which is actually what I think is going to happen. Either way, that's bad news for gold. And seeing this candle in the Dixie, in the dollar index, and the gold price as a reaction of it actually going down over 1% in Asian European trading, that's a big warning sign. That's a big warning sign, especially since the other factors haven't really done anything. Oil is stabilizing. Told you about it on this channel. Again, hit the subscribe button so you're always informed. We got rebound potential to this gap fill that I pointed out here before, around 85. Could happen quite quickly. It's about a 10% jump in oil prices. Doesn't really change much mid to long term, but that is not great for gold either. You know, it wouldn't bring back the inflation panic. That really is going to set in if we go over 100 in oil. But it's not positive. It's more like a neutral to slightly bad. Bond market, 10-year, building out structure above the 50. Nothing terrible right now. We're not moving up significantly, right? In the 10-year for gold, that would justify the gold price getting pushed down as it is getting pushed down today. But we're building out structure above the 50. So there's still danger that this could turn around. Though overall, we're seeing lower highs. That is positive. 30-year, fighting with the uptrend. Again, sell-off, regrouped it. Okay, it's basically nothing of major influence for gold, and still gold goes down. So the technicals and the trend following traders, institutions clearly have control of the gold market. And that would signal that they're going to try to push down gold. At this moment, again, we have to see what's going to happen with the US today and public service announcement. I'm going to do a video tomorrow where we're going to look at the weekly candles of gold and silver and see where we stand. These type of videos usually very important because they give us a bird's eye view of what's going to happen with the precious metals. So I would recommend you watch them. And again, the subscribe button, that is the solution so you don't miss the video. Also, new video coming tomorrow for our VIP newsletter, which is free. Link is in the comments. You can sign up. We're not spamming you. You're going to get 1 to 2 videos a month, quality content. Tomorrow, uranium. If you saw what happened with energy fuels, which I had talked about in the last uranium video, I think it was on Monday, wow, things are happening in uranium. You don't want to miss that newsletter video. Again, you can sign up for free. Link is in the comments. So we got to assume gold is going to go down. That is clearly what the charts are telling us. That is clearly what the intermarket analysis is telling us. That gold could not muster up any strength with the weakness of the Dixie is worrisome short term for gold. So I'm in no rush jumping into buying any of the mining stocks right now. Instead, I'm digging deeper, doing my watch list, as I've been telling you for weeks, digging deeper in some of the companies that I really like, and I'm going to introduce some of them in the coming weeks, as I've done with a couple of the silver companies. Silver Tiger, that was we hit that one pretty well. I think that one went up like 30-40% or something after I talked about it on the show. Not that we moved the market, it was the jump in silver, and then Silver Tiger, which has really high leverage on silver, obviously jumped significantly with this silver price. But hey, that's the information you get here. We're glad to have you. Now I wish you a great start to the weekend. We'll see us tomorrow with a special video. And if you sign up for the VIP newsletter, with a VIP newsletter video. Have a great Friday. Bye-bye.